Booyah! Tech titans and tumblers, your money, your move! Welcome back to Tech Expose, the only place, the only place, where we tell you what's really happening in the tech jungle. I'm your host, and tonight we're not just scratching the surface, oh no, we're diving deep into the heart of the tech stock market. You want to make money? You want to protect your hard-earned cash? Then you gotta make informed decisions. No more throwing darts at a board, people. This isn't a game of chance, it's a game of knowledge, of homework, and of guts. And that's what we're bringing you tonight, the unvarnished truth. Tonight, we're not just cheerleaders, and we're certainly not hearse drivers for every stock out there. We're looking at both sides of the coin. That's right, we're talking buy opportunities on stocks that are ready to rocket. Stocks with fundamentals so strong they could punch through a brick wall. But we're also hitting the sell button on those names that are showing cracks, the ones where the story has changed, or maybe never was that good to begin with. It's about maximizing your gains and minimizing your pain, folks. That's the Kramer way, and that's the Tech Expose promise. So buckle up, because we've done the homework for you. We've sifted through the noise, the hype, the FUD fear, uncertainty, and doubt to bring you actionable intelligence. We're going to name names, we're going to talk price points, and we're going to give you the conviction to pull the trigger, whether it's to load up the truck or to get out while the getting's good. This is where the rubber meets the road and your portfolio meets its destiny. Are you ready? Let's get to it. Alright, first up, let's talk about a name that's music to my ears. Spotify, Spot. Now some people, they look at Spotify and they see competition, they see a tough market. I look at Spotify and I see a juggernaut in the making. Their business fundamentals, rock solid, people. They are dominating the audio streaming space, and it's not just music anymore. We're talking podcasts, audiobooks. They're building an audio empire brick by brick. This isn't just some flash-in-the-pan tech play. This is a company with a real moat, a sticky subscriber base, and a management team that knows how to execute. They are innovating, they are expanding, and they are monetizing. That's the trifecta, folks. The potential for growth here is absolutely tremendous. Think about it. Every smartphone, every smart speaker, every car is a potential Spotify touchpoint. They are embedding themselves into the fabric of our daily lives. And the numbers? The subscriber growth continues to impress, average revenue per user is climbing, and they're making serious inroads into profitability. This isn't just a story stock, the financials are starting to sing a beautiful tune. I'm telling you, the bears on this one are listening to the wrong station. They're stuck on some scratchy AM signal while Spotify is broadcasting in full Dolby surround sound. Don't be one of them. So what's the play? We're not just blindly buying here, no sir, we're strategic. I like Spotify, and I like it even more at specific price points. We're looking for optimal momentum. If you see this baby dip, maybe on some market-wide nonsense, that's your chance to pounce. I'm talking about building a position. For those looking for a clear signal, if Spot can break out above its recent highs with conviction, that's your green light to get even more aggressive. This is a long-term winner, but we can play the short-term wiggles too. Spotify, it's a buy. Next up, a name you might not know, but you need to know. OPI, that's OPFI. Now this isn't one of those glamour tech stocks that gets all the headlines. No, this is a workhorse. This is a company that understands the most beautiful word in the English language next to booyah is cash flow. And OPI, they are generating cash flow like it's going out of style. Exceptional, I tell you, absolutely exceptional cash flow generation. In a market that's getting skittish about companies that just burn money, OPFI stands out like a lighthouse in a storm. This isn't just a one-trick pony, folks. We're seeing a consistent, beautiful, glorious upward trend in this stock. The chart is a thing of beauty. It's like watching a master painter at work, stroke by stroke, higher and higher. Why? Because the market is starting to recognize the value here. They're seeing the smart money move in. They're seeing a company that's not just promising future profits, but delivering real, tangible results right now. This is the kind of under-the-radar gem that can make you serious money if you get in before the herd stampedes. And believe me, the herd is starting to sniff this one out. So, how do we play OPI? We want to capitalize on this beautiful momentum. We're not trying to be heroes and catch a falling knife here. We're riding a rocket ship. I'm telling you, consider buying this one above its previous close prices. When it makes a new high, that's a signal that the buyers are in control, that the momentum is strong, and that there's more room to run. Don't be afraid to pay up for quality, especially when that quality is spitting out cash like OPFI is. This one gets my seal of approval. Buy! Let's talk security, people. Cybersecurity. In this day and age, it's not a luxury, it's a necessity. And when I think cybersecurity, one name that consistently impresses is CrowdStrike CRWD. These guys are at the forefront of protecting businesses from the bad guys, the hackers, the digital pirates, and their secret weapon? An absolutely impressive gross profit margin. We're talking serious profitability on every sale they make. That tells you they have pricing power, they have a superior product, and customers are willing to pay for it. That's the hallmark of a fantastic business. The trend here is undeniably bullish. The chart is pointing to the sky. This isn't just wishful thinking, the technicals are lining up with the fantastic fundamentals. CrowdStrike is a leader in a rapidly expanding market. As more businesses move online, as threats become more sophisticated, the demand for what CrowdStrike offers is only going to go up, up, up. They are consistently beating earnings expectations, raising guidance, and showing the kind of growth that makes Wall Street drool. This is a company that is executing flawlessly in a sector with massive tailwinds. You ignore names like this at your own peril. Now, for the action plan on CRWD, we're not just jumping in willy-nilly. We're looking for the sweet spot. I'm advising you to watch this one like a hawk. We're looking for upward movement, specifically a break above key resistance levels. If CrowdStrike can punch through those levels with volume, that's your signal, that's your invitation to the party. That tells you the big money is stepping in, and you want to be right there with them. This is a top-tier name in a critical industry. Keep your eyes peeled for those buying opportunities, because CrowdStrike is a winner. Chapter 4 Apple AAPL. Core problems? Time to take profits. Alright, now we gotta talk about a giant, a titan, Apple AAPL. For years, this has been the go-to stock, the one you could buy and forget about, but folks, times change, the music can stop. And right now I'm seeing some concerning signs with Apple. Let's talk about free cash flow. It's the lifeblood of any company, and with Apple, we're seeing a decline. That's a yellow flag, maybe even a red one. When a growth company, a tech behemoth, starts seeing its cash generation slow down, you gotta ask why. What's happening under the hood? And that brings me to my next point, innovation. Where is it? Seriously, Apple used to be the king of the next big thing, the iPod, the iPhone, the iPad, game changers. But lately, it feels like incremental updates, a slightly better camera, a slightly faster chip. Is that enough to justify the massive valuation? I'm not so sure. The competition is catching up and in some areas surpassing them. The magic, that spark of revolutionary innovation seems to be dimming. And in the tech world, if you're not innovating, you're falling behind. That's the brutal truth. So what's the call on Apple? This is tough because it's a beloved company. But we're not here to be sentimental, we're here to make money and protect capital. I'm advising you to consider selling Apple, especially as it approaches resistance at its 50-day moving average. That moving average is like a ceiling, and if the stock can't punch through it, it's likely to head back down. Take some profits off the table. Don't be greedy. The story here has changed, and it's better to be safe than sorry. Apple, for now it's a sell. Chapter 5. Lending tree. Chopping this one down, strong sell. Next, we've got a name that's been barking up the wrong, well, you know, lending tree. And folks, this tree is looking like it's about to fall over and crush your portfolio if you're not careful. The biggest problem? A complete and utter lack of growth. Stagnation. In the fast-moving world of fintech and online marketplaces, if you're not growing, you're dying. And lending tree? The vital signs are not looking good. Their financial indicators are flashing red alerts all over my screen. This isn't a temporary blip. This is a pattern of underperformance. Let's talk about cash generation, or rather the lack thereof. It's poor, dismal even. This company is struggling to turn its operations into cold, hard cash. And in a rising interest rate environment, companies that aren't financially robust, companies that can't generate their own fuel, they get into serious trouble. We're seeing an ongoing decline in the stock price, and it's not without reason. The market is sniffing out the weakness here. The smart money is heading for the exits, and you should be too. Don't try to be a hero and catch this falling knife. You'll only get hurt. This isn't a nuanced call, people. This isn't a wait and see. This is a strong sell. Lending Tree is showing all the signs of a company in distress. The fundamentals are weak, the technicals are ugly, and the overall story is just plain bad. There are so many better places to put your money in the tech sector right now. Why would you tie up your capital in a name that's clearly struggling? Get out. Sell. Protect your portfolio from this deadwood. Lending Tree, it's timber. Chapter 6 Wix. Website. Woe's market says no. Last on our hit list for today, let's look at Wix. Wix. Now this company, which helps people build websites, had its moment in the sun. There was a time when the story was compelling, when growth was explosive, but folks, the market sentiment has shifted dramatically. We've seen significant, and I mean significant, sell-offs in this stock. The chart looks like a ski slope, and not the bunny hill. I'm talking a double black diamond straight down. That's not just a correction, that's the market screaming its disapproval. The trend here is undeniably, unequivocally bearish. When a stock gets hammered like Wix has, it tells you something profound. It tells you that big institutions, the ones that move markets, are losing confidence. They're voting with their feet, and they're running for the door. Maybe it's increased competition, maybe it's a slowdown in customer acquisition, maybe it's concerns about their path to sustainable profitability. Whatever the reasons, the verdict from Wall Street is in, and it's not pretty. The market is a harsh judge, and right now, Wix is getting a failing grade. So what do you do with Wix? You don't try to be a bottom fisher here. You don't try to guess where the pain will end. You listen to what the market is telling you, and the market is telling you to sell. The declining confidence is palpable. This is a situation where you cut your losses if you're in it, or you stay far, far away if you're not. There are no brownie points for holding onto a stock that's in a death spiral. Protect your capital. Wix, right now, is a name to avoid, a name to sell. The trend is not your friend here. And there you have it, folks. Another edition of Tech Expose in the books. We've covered the good, the bad, and the downright ugly in the tech stock universe. Remember, the key to success in this market, or any market, is staying informed. It's about doing your homework, understanding the fundamentals, and not being afraid to make tough decisions. The tech landscape is constantly shifting, new innovators are rising, old giants can stumble, and you need to be vigilant. Don't just follow the herd, think for yourself. We've given you some names to buy companies with strong prospects, solid fundamentals, and charts that are screaming upwards. We've also warned you about some names to sell stocks, where the story has soured, where the risks outweigh the potential rewards. These aren't just random picks. These are calls based on research, on analysis, and on decades of experience watching how this crazy market works. Use these insights, consider them carefully, but always make your own informed decisions. Your financial future is in your hands. Don't be passive. Be active, be engaged, be smart. Keep tuning into Tech Expose for the latest insights, the hottest tips, and the unvarnished truth you won't get anywhere else. Until next time, stay profitable. Don't let the bears get you down, and remember, there's always a bull market somewhere. Booyah!